Hello, everyone, and welcome to the new episode of Entrepreneurship Lab. This is your host, Nevina Bajalac, welcoming you to another episode where we bring you different experts and we talk about topics necessary for you to grow and scale your business. I'm very excited because today we talk about a very important topic, which is finance and accounting. And I brought an expert himself. He's coming all the way from US, Pennsylvania, and his name is Ben Risser. And Ben has been a CFO and expert in finances for many, many years. And in his business, he provides his business is called Provident Financial Services, and they provide small and equity investors with financial intelligence and advice they need to transform their business. Ben is passionate about small businesses and startups, getting them the right financial advice before they get into investments. Ben, welcome to the show and thank you for being here today.
Thank you so much for having me.
So, Ben, tell us a little bit more about your background. How did you always love finances? Did you study it? How did you get into financing and accounting?
The answer is no. I always loved aviation and airplanes, and I never saw myself having a business in the accounting and finance space. I started my professional career out in aerospace engineering. Worked at Boeing for almost 9 years, and during that time, I always felt restless. Didn't quite understand why until I started reading all the Robert Kiyosaki books, the Rich Dad Poor Dad books, and he really put a framework to the different kind of people that are. Some people are wired to be employees, business owners, investors, etc. And I discovered I was an entrepreneur, and I started studying finance. Passed the level one chartered financial analyst exam while I was there, and moved into eventually was laid off out of engineering, but had been pursuing real estate syndication, syndicated 6 large multifamily investments in partnership. And during that time, really just found myself migrating to the CFO role. And then around 2021, 2022 timeframe, I pivoted to providing fractional CFO services, chief financial officer services solely. And That's what I'm doing now.
So that's amazing because you have like a expertise, and it's interesting. Your background is also different. It's funny how we find our way, and life guides us. You know, we study one thing, I studied completely something different. I never thought I would go into business and consulting. But I think what's also interesting is obviously you've been in real estate and you have a lot of experience as entrepreneur. So how was it for you quitting your job and just pivoting? I love you mentioned one of the first book that was also a breakthrough for me to guide me in that direction was Rich Dad Poor Dad, and it's
hmm
kind of like really a stepping stone for so many entrepreneurs that I know. But how was it for you? How was the transition? Was it difficult? Was it, I'm sure there were struggles. It's completely different mindset we have to have, different experience. How was your experience?
Well, it was kind of thrust upon me. I was laid off out of the engineering profession, and fortunately, I did have my first real estate syndication under contract, and it closed, a couple months after I was laid off. But you know, real estate syndication was great when I had a full-time engineering salary, and it was just kind of icing on the cake because you really don't get paid, and, and you get paid when you buy and you get paid when you sell, and that could be 3 to 5 to 7, 10 years depending, for value add multifamily. And so, to be honest, it was uncomfortable. It's kind of like whale hunting. You get a big paycheck, and then it's got to last you for a long time. And that was the main reason that I pivoted towards providing fractional CFO services, is to bring some stability. I still have ownership interests in those syndications, but certainly not counting on them for putting food on my table.
I love that you mentioned that because I really think they're different. Of course, you can make money in different areas. Like you can make money in stocks and you can make money in real estate and business. But what I see with a lot of successful entrepreneurs and some struggle that I see is that, for example, sometimes real estate, if you are renting properties, it depends on high season and tourism, and sometimes it has ups and downs. Businesses also have ups and downs. And like you said, if you're flipping properties or investing in properties, you don't get that capital gain until you sell the property. So it's, I think, very important to learn to find yourself where you what you enjoy, but also to diversify, because like you said, you need to have the cash flow to provide for you, of course, as much as possible passive income. But yeah, I think diversifying, it's very, very important. So Ben, tell us
Yeah,
a little bit more. Yeah, yes, please go on.
go ahead. Go ahead. What were you going to say? I think I
I
cut
want
you
to
off.
ask you. I want to talk about finances today with you.
Sure.
And what were some first steps that, let's say, somebody is a startup or having a company, medium-sized company, but they are not having maybe accountants, or they're just outsourcing to an accountant. What are some things they should put in place and have in place that is very important for their business?
I would say, and I say this with all integrity, not trying to be self-serving or anything, but I would say hire a fractional CFO as soon as you can afford it, as far as being a startup entrepreneur. And you don't need to necessarily even need to hire them on a recurring basis. I would say when you're starting the business, um, you need to understand what kind of capital resources you're going to have and what you're going to need to have in the bank until the company starts generating revenue. And if you could hire a CFO on a project basis where it's just like, hey, build me a financial pro forma to understand financially what it's going to take to get this business to revenue, it's going to give you a lot more peace of mind. Most likely, you're going to have an idea of the appropriate amount of capital to raise. And you're going to have a financial pro forma, a professional one that you can go to investors with. I understand that, sometimes, entrepreneurs and ideas, it kind of starts out spontaneously and you kind of bootstrap it as you go. But I would just emphasize, as soon as you can, to hire a fractional CFO, either on a project basis or on a quarterly basis, whatever you can afford, so that you have financial situational awareness, uh, on the front end, and you don't get a situation where you've got momentum and you run out of cash and you lose that momentum and you can't strike while the iron's hot.
Yes, that's very clear. Thank you. What are some mistakes? I usually love asking this, that startups are making when it comes to accounting and finances. And I think sometimes when we're really starting, we don't have enough clients or customers. So it depends on type of business. In some service businesses, you don't have so many invoices. So if you're selling some products, you have a lot of invoices to do. So maybe some people hire faster. So it really depends on the type of business people have. But what are some in general mistakes you see startups, freelancers, business owners are doing when they're starting their business when it comes to accounting and finance?
They don't hire a bookkeeper soon enough. A
Mm.
lot of entrepreneurs are phenomenal technicians. They know how to create value for their customer. They can even be great at business development and selling their products. Um, but you don't want to get too far along without high quality bookkeeping, where your books become a mess, and that bites you every time it comes time to file for taxes. Um, I would say hire a bookkeeper right out of the gate, so that all of those initial startup expenses get recorded properly, because most of those startup expenses belong on the balance sheet, and not in the income statement. And an entrepreneur who's trying to DIY their bookkeeping may not know that. They might record their capital contributions as income, and not as a contribution in the equity section. And just mistakes like that are going to cause you frustration and churn with your tax accountant when it comes time to file your taxes. So I would say hire a bookkeeper right away, because most likely it's not your skill set, and your time is best used creating value and developing your product, and finding new customers.
Yeah, lesson learned. Everyone who's listening, make sure to hire a bookkeeper or accountant as soon as possible. So, what are some tips that companies or startups can save money on? Like from your experience, I'm sure you're auditing, you're, looking at things, you're advising like, hey, you can cut cost here. I know in the US you have different ways with taxes. In here in United Arab Emirates, we just started corporate tax, so people will start claiming from next year their expenses. But before that, we didn't have tax. We only had a value added tax, right? VAT, which was completely different. We charge it from the client and just pay it back. So, what are some things, like I said, where you think the company startups can save money, but maybe they're not aware?
I would say, I think sometimes it's easy to put the cart before the horse and like purchase products or services that maybe you're not going to need for another 2 years. And, maybe QuickBooks will do just fine here for the first couple years, and you don't need that, $1,500 a month, really sophisticated accounting software. Not every startup needs, NetSuite right out of the gate. They can start out with QuickBooks. So I would say right sizing your products, and you know growing to that, with that product. Try to purchase a product or service that's going to have a little bit of room to grow. But I know my tendency is like I like to build this huge amazing system where it's like, all right, that system's really not going to make sense until I've got a couple more zeros on the revenue. And so don't overbuy on your softwares and services. And I would say, work with a tax accountant who can understand, if there are, if the government is trying to incentivize development and research in certain areas where like maybe there's grants or tax credits that you can take advantage of. If you just kind of like, you know, tweak or reframe what you're doing, you can qualify for things that maybe you weren't even aware of. So like that's another way that you can save money. Um, but and I think, uh, with fractional CFO work, there's monthly packages, there's quarterly packages. So just right sizing that. You may not need the monthly package, and most likely you can't afford it when you're just first starting up. But really about right sizing, because we can be so eager for growth, and entrepreneurs are often visionaries, and we envision where we want to go, and we can build something that's we're really not ready for yet, and it costs a ton of money to do it.
Yeah, thank you for that. That's a couple of great tips there. So, a discussion we often have is a lot of startup and companies, they're not paying themselves salary, right? If you're a freelancer, and especially now we have corporate tax, I know it's very important on paper as well, paying yourself salary because that's an expense that you have to claim. But what would you say to startups? And I also I know when it comes to investing, right? If you're not calculating, I even consult companies, medium size, they're growing fast, and CEOs for let's say 3, 4, 5 years, they're having business, they never pay themselves salary, they're just using the money. So one of the first thing we start paying that salary, and it's because then we cannot have the relevant numbers for investors. Actually, we don't have the correct expense list there and expense amount. So what would you say to someone who's just starting, who feel they don't generate, regularly, every month is different, their ups and downs? What should they do? Can they continuously, how can they continuously pay themselves salary? Should they build the habit? What are some things you are advising on this topic?
Yeah, that's a challenging one because I can see it both ways as far as like reporting, uh, an owner salary. For us, when a lot of businesses start out as limited liability corporations in the US, and then as they grow to a certain point, it makes sense from a tax perspective to transition to an S corp where you must report a salary. And I think it has to do with kind of like the stage that the business is in. Because if you've watched Shark Tank, um, s- uh, s- you could there's probably still blood on the walls from when entrepreneur came in and said, yeah, hey, I'm owed a salary. Like they're in startup mode, and they have this big hefty salary that they expect the sharks to pay their back salary. And usually those people are pretty much laughed out of the room. And so there is a certain time, a point in a company's growth where it is appropriate to put a salary on the books because investors know that the company's at a point where they're going to require a CEO. And so for the cost of a CEO, if we're going to raise capital, because otherwise we're inflating our net operating income if we're not including that executive salary. If you're, early stage, it you might say like, no, you don't need that $150,000 a year CEO salary. What you need to do is spend a little bit more money on marketing and sales and get some revenue so that we have NOI. So I really think it kind of depends on the stage. I know LLCs, I some of my clients, they try to pay themselves dividends regardless of what the company's financial performance was, and they can run the company out of cash if they have some slow months. And so dividends really should be sized on historical performance. And then at a certain point, it is appropriate to put owner salaries in there in the financial. So I think it really comes down to like timing and where the business is at in its growth.
Yeah, and that's why we should have someone like you and someone who is an expert and understand accounting and the financial growth of a company to help us with those things. So that's very helpful. Thank you for that. And I love Shark Tank. Big fan as well. And it's such a good show, and you can learn so much.
It's-
And one of the things I learned
yeah.
is they never invest if you don't know your numbers. Like if you're unrealistic with your numbers, when people ask insane amounts for like 10%, they understand, right? I mean, invest like when you people entrepreneurs are so passionate when they create a product or the service, but we have to also understand that this is what we are hoping the business will go, but nobody guarantee that. So in that first round of looking for investor, I think it's very important to understand that, and to understand there is a first round where you're going to get less, but then you grow, and then you can have second round and third round of investors where
Yeah.
obviously you will ask much more for those 10%, three times more, five times more, because now you grow your company. And I think that's why a lot of people miss out on investors, because they're just not having the realistic numbers. They don't even know their numbers. So what would you
And they
say to
don't even
people if they
have
want, yeah, to raise capital and get investors? What is your experience? I know you're helping startups with that as well.
I think it's important that you have uh, credible accounting from day one. So that goes back to like hiring a bookkeeper as soon as you can, so that when it comes time to start showing your business to investors, you have credible accounting that, and if it's been done high quality, that's the language that angel investors and all those guys on Shark Tank, those guys know what financials need to look like to make sense for investment. And if you've done your bookkeeping, yourself, and you're not, don't have the accounting expertise, you're really going to embarrass yourself when you try and get in front of sophisticated investors who, oftentimes they've started and sold several businesses. They know exactly what financials need to look like, and then also credible financial projections. So I'd say my advice is, you know, hire that talent on a right-sized basis, so that you are prepared to raise capital when the time comes, because the investors who are going to be good investors and want to stick with you are the ones that are going to have that level of sophistication where they really understand the nuances of your business. And it's because the nuances are accurately being reported and projected. And so they'll stick with you through a certain amount of ups and downs, just because they trust your accounting and they understand the nuances of your business.
Yeah, that's truth, and thank you for sharing that. So I want to ask you. You also build your practice. You also entrepreneurs. What are some mistakes you made that was a lesson that you didn't know, and maybe if you share it, people will also learn from it. So what are some mistakes that you personally as entrepreneur made? It doesn't have to be with accounting and finance, because that's what you're more expert in. What is something that in general was you wish you maybe knew earlier, and it will save you some time in growing your practice?
I think a situation where I would say was due to inexperienced, but there was I had a big heart, but I was also made a poor choice. Was I had a client, a CFO client, and they hired me to make sense of their accounting and put together financial reporting and dashboards and projections and such, but their accounting was a nightmare. And their bookkeeper just didn't have the experience to do bookkeeping at a level that the business required. It was a real estate development company. There was a lot of moving parts, a lot of just real estate developers are notoriously creative in financing, and that is very difficult to book. Um, and so I, out of a big heart, not wanting to threaten this bookkeeper's job, took it upon myself to try and educate her and train her up uh, to be proficient so that we would have the data we needed to fulfill what I was hired to do, which was provide all that financial intelligence. Um, but it took too long, and the customer grew frustrated and eventually fired me. And so the lesson learned there was I it wasn't my place to try and educate this bookkeeper. What my job was and I should have done was to say, hey, so and so, I love them, but they are not up to the task for this particular role. And the best thing for you to do would be to find another more qualified bookkeeper so that I can get to delivering what you hired me to deliver. And so that was a mistake where, a young entrepreneur with a big heart, um, made a decision that was actually a disservice to the client and a disservice to my company.
Yeah. And it's interesting because I have one of my clients. I had to point out as a consultant some weak points and people that I found weak. And sometimes CEOs, right? You have a big heart. People are lovely. They work with you, but as a consultant, I come often as a bad cop, and you just have to say how it is. And I said, look, you will make a decision, but I am saying this person is a weak link. Like it was in one of the companies, like the accountant, like so many mistakes, not knowing enough about taxes, how he can say. And the company was growing rapidly. I told her, if you want to keep him, you need to bring at least someone. He can do some basic things like invoicing, but you need someone stronger because it's gonna cost you money. Like he's starting to make big mistakes. And with finances, we don't want to game with that. And also, I interview so many entrepreneurs, and they always say like, we wish we fire people faster and bring the right people, because at the beginning you feel
Yeah.
it's not an easy thing to fire someone. But if you see someone is not performing, or they simply don't have the skills required, you just need to let them go as soon as possible. So I absolutely agree, and that's my experience as well. So Ben, as we're wrapping up, I would love to ask you for some final tips that you maybe have and you would like to share with everyone listening when it comes to your expertise and your experience and everything you've seen with startups and
hmm
entrepreneurs.
I think my recommendation is, whatever you're building, whatever you're doing, have it be in alignment with your purpose. Like, I think entrepreneurs and like you need to do that introspection where you understand what legacy do I want to leave with my life, and how is this business serving that legacy? Um, and I think if it's not in direct service of that purpose, um, when push comes to shove and things get really difficult, it's going to be uh, drudgery and tough to hang on if it's not really in alignment with what you feel called to accomplish with your life. So I would say, um, just try to have that. Don't lose sight of your why when you're building whatever you're building, and be generous when you get there.
Oh, I love it. I love that. And it's true. Like we want to also contribute and give at least. I mean, I really believe there is the biggest fulfillment in actually giving back. So thank you, Ben, so much for being here today, for your expertise. Thank you, everyone, for listening. Make sure to subscribe to the podcast if you haven't already. Download this episode and share it with at least one more person so they can benefit from this information as well. And as always, thank you for being here. And I will see you in the next episode.